Morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Visual JForex, we will be taking a look on the Gator indicator, which is part of the indicators developed by the Bill Williams. In this part, we will try to see what are the functional details of the Gator and how we can deploy it on the chart as well as on our platform to develop an automated trading algorithm. So let us go to the description of the Gator. In this Bill Williams indicator series, we have done most of the indicators, and this indicator is actually, you can even say that a bit of modification of the alligator which we have considered earlier. If you see the short description here, this is based on the alligator and shows the degree of convergence and divergence of the balanced lines. So you have to take into account the values of the three outputs we get for the alligator: the jaw, the teeth, and the lips. And we have to take the difference between these balanced lines, and then depending on whether the difference is on the rise or on the fall, we get this charting, and we have these two values, the positive, negative, as well as the zero value is there. But basically, if we see the negative value, even that is the difference, absolute difference between the red line and the green line. And by the red line and the green line, we actually mean the balance lines of 8 and 5 time periods. So I will have to explain to you on the chart here. And here we have this alligator indicator drawn, and on the bottom half we have this gator plotted both with a positive as well as negative value. And here if you see that whenever the difference between the blue line and the green line is lips, is called lips, and the blue line is called jaw, and the red line is called teeth. So here, when we see these green lines on the rise, the green bars, that is actually the difference between this blue and the green line. And whenever the difference is on the rise, we get this value which are on the rise, and whenever the difference between these two lines starts to decline, we have these charts going down. And these negative values which we are seeing here colored red, these negative lines are actually showing the absolute value only with the minus sign. And we don't really have to be concerned with the minus sign. If we want to take into account the difference between these green and the red line, we have to take the absolute value. So whenever you will be doing the comparison, you have to keep in mind that this is basically the difference. And just for the convenience of this charting, or you can say presentation, we have this difference denoted by the minus value. So if the difference is on the rise, you will have this negative values going lower, so that will be in decline. But we have to incorporate, we have to interpret it accordingly. And when this negative value starts to rise, that means actually the difference is going down. And that is how it is going to be for our algorithm development purpose. So what we can do whenever we are developing an algorithm, we have to take into account this Gator block, and then we have to design our algorithm to see which way we can exploit these conditions, these parameters of the Gator to our advantage. So here, this is the Gator block. Here you will have this brief description of the Gator's functions, and we have to provide these input values, the default instrument, which can be anything starting from Euro USD to any other instrument of your choice. So you have these listing which are supported for the Gator block on the Visual JForex platform. Suppose, for example, we take CHF JPY, you can do that. So we have default instrument now defined for CHF JPY. Our time period can be anything in between the 10 seconds to 1 month. So whichever way you want to choose, you can do that. Let us take half an hourly. So you can take half an hourly, then we have to do the charting accordingly. We have to convert these values on half an hour chart. And here we have these alligator and Gator plotted on a half an hourly chart of Euro USD. Let us change this to CHF JPY. CHF. Okay, here Swiss franc versus yen. So here comes our chart. It's taking a bit of time to load. Okay, so here we have got these plotted. Now, suppose you want the trades to happen only during the initial hours or initial half an hours of the trend change. So you have to take into account these difference. You don't really want any new trade to be initiated when there has been due run in the underlying instrument and now it is entering into a consolidation zone. In such instances, what you can do is you take into account the difference between the balance line, and as and when the balance line difference starts to decline, so you can to get the idea just ahead of time. I think you can incorporate this negative line difference, that is the difference between the lips and the teeth, the difference between this green line and the red line, and whenever any underlying instrument enters into a consolidation phase, you will have this difference going down, and that is what is visible here. And as I said, these are basically absolute values given a negative sign, so we don't really need to be bothered with that. We just have to incorporate the indicator which is going to be useful for us, so we have to design it that way. So you might need to take multiple blocks of the Gator indicator to do the comparison. Suppose if you take current hours or last candle block of the Gator, and then you go back in time and say you want to check the difference which was there earlier by say 5 historical candles of half an hour. So you can do the comparison, and if this difference starts to decline, you can stop trading, and as and when the difference starts to rise during the initial stages of the start of the trend, you can design it like that. So all you have to do is configure the parameters of the Gator accordingly, and you will have the freedom to design your automated trading algorithm in a way which will bring you the profitable trades and not the loss making trades. Of course, some of the trades are going to go in loss, some of the trades will go in profit. That's how it works. But our basic aim is to make the algorithm as much possible, as much profitable as possible. So to that extent, the Gator is going to help us stay ahead of the curve, you can say. So here we have to define these input parameters. The shift can be anything. And suppose if you want to go back in time by say 4 historical candle blocks, then you can do that. You have to choose the look back period of say 4, and then this jaw time, teeth, and the lips time is predefined here. These are default values, the combination of 13, 8, and 5. But as I had explained to you while we were considering the alligator just a couple of sessions back, you can choose a different combination, but this is the default setup. And if you want to do any changes, all you have to do is edit the parameters and try out different values. Suppose if you want to use 18 instead of 8, so you can do that as well, and you will have these values now defined differently. We have this tit value calculated on 18 candles, so we have this value here, and earlier it used to be in between these blue and the green line. So you are free to do your experimentation. You can choose to do different customization techniques, and whichever way the combination you feel is likely to be more profitable, then you can input those parameters here as I had explained to you there. Even here you can do the same change, and suppose if you want to use the 18, then you can do with 18, and that's how it will be reflected when your algorithm will be trading on its own. So these are input parameters. Let us again get back the default values. And then, as I explained to you on the chart, we have the output values. And output values, we have three output values, and we can use these output values essentially to do the comparison, because without doing the comparison you don't really get an idea of any underlying trend, whether it is going up or down, or whether the instrument is starting to trend or it is in the last phase of its trending, and now it is going to enter into a consolidation phase. So for us to be able to determine the stages of the trend, we have to do comparison, and that's where this indicator is of great use. And whenever we see these values going closer to zero, that means that the underlying instrument has been in a consolidation phase, and we can then do sort of historical analysis and define the parameters in such a way where we will have the highest chances of being guided well in our trading endeavor. So you can configure these combinations, these parameters, and then use these output values to meet your goal. And here these are the other side of the settings. It can be defined on the bid or on the ask. I hope you are well aware of the difference between bid and ask, and we get little different values, little difference between the values, and that's because there is a spread in between the bid and ask price, and also the price on which the indicator is calculated makes a whole lot of difference. Now here this indicator is being calculated on the median price. Suppose if we use closing price, then you will have the output values uh, will be a bit different, and whichever way you want to carry out the calculation, you can do that. You can choose high price, low price, and you will see certain difference there. So here I will try to explain to you. When we are choosing low value, we have absolute value. Let us take into account the absolute value for this. The time is okay, so here we are getting this difference, and the time is of 8 GMT, 21st of July, and the positive value is 0.0192. And now we edit the indicator, and we will apply it on the high price and then see the value at the same time, 8 GMT of 21st July, and as you can see we have the positive value which is different. Now we have a positive value of 0.0162. Earlier it was 0.0192. So this difference crops up whenever we change the applied price, so you have to be careful while using the applied price, because applied price is the price on which all the calculations will be done. So here you get these options: open price, high price, low price, typical price, and median price, and accordingly all these calculations will happen. So this is the indicator which is of you can say high value, and it really helps us in determining at what point in time we should be trying to get involved, trying to get an entry in any trade in any instrument of our choice. And to that extent it is going to help us in making decent amount of money. Of course, if we are able to figure out a combination which will be of profitable manner. So that's it from my side for today's session, and we will be back tomorrow. And till then, have a fabulous day ahead. See you tomorrow. Goodbye.